It will probably be a long time before the 28th of February 2020 gets erased from our memories. In fact, the day could go down in the history of Indian stock markets as yet another Black Friday. After all, a 1,100 point correction within few minutes of trade is a rare phenomenon. By the end of the session last Friday, the Sensex had lost nearly 1,400 points. And if you consider the whole week, the markets shaved off a good 6%. The Sensex had shed over 6% gains at least 5 times in the past decade. Most of the instances were in 2009 and one in 2016. But each time there was a strong bounce back a week later, and it recouped almost all the losses. Now, I certainly do not wish to predict if there is any such bounce back on the cards this week. The coronavirus crisis could very well keep markets weak and global stock markets in the red for several weeks. Anyone who remembers the SARS crisis of 2003 would know that it took nearly 6 months for the stock markets to overcome the fear. But in the meanwhile, how should you, as an investor, tread the coronavirus crisis safely? Is there a way to do that? And can this be your chance to buy some long-term multibaggers? Well, like I always say, nothing should change the way you invest. Just follow the steps you always do. First, do not pay heed to the talking heads who are propagating panic, or even those who recommend to buy coronavirus-resistant stocks for the short term. Such irrational activity could only do more harm to your portfolio. Second, review your portfolio allocation to see if your overall allocation to stocks is in line with the market valuations after the correction. And third, take a close look at the stocks you were hoping to buy once the valuations offered more margin of safety, and act only on the safest ones. This is what I have been doing in my attempt to use the market correction to pick multibaggers of the next decade for my Stockster subscribers. Now, the multibagger stocks typically have some key characteristics. These characteristics allow the stocks to have a long runway of superlative returns. Which are they? First is capital efficiency. The companies that are able to constantly generate higher returns on the shareholders' equity, they are the ones with the highest potential of multibagger returns. The idea is that the more profitable the company gets, the more value it will create. Second, low leverage. This is extremely important for companies to tide over periods of tight liquidity and high interest rates. Third, profitability with low capex. Companies which have already done the hard work of building plants and machinery for future growth are in a ripe phase to benefit from their efforts. And fourth, this is the last but the most important, the scope for PE expansion. Stocks with low PE multiples tend to have a huge room for PE expansion if the business and the management move in the right direction. Now, if I must pick just one characteristic or ingredient that has been the key catalyst for the multibagger stocks, it would be their PE expansion. Larger the PE expansion, higher has been the quantum of returns from the top multibaggers. Take a look at this chart. The top 100 odd companies which gained up to 1000% have had extraordinary fundamentals. But what really made the difference between them and the 10,000% gainers was the quantum of expansion in PE multiple. So, I used the sharp correction in the past week to recommend not one or two, but 4 solid safe stocks to my Stockster subscribers. Each of these stocks have tremendous potential to be multibaggers of the next decade. One is a financial entity with deep roots in rural India. Other is a tech major making huge strides in cloud storage. And the other two are very well-known FMCG players. What was common amongst them was the margin of safety in valuations that the recent correction had brought in. So, I would recommend that you keep the market panic at bay, continue to look for stocks that have multi-bagger characteristics, and buy them as and when the market correction offers you the pockets of safety. More details on this in my free newsletter, The 5-Minute Wrap-Up. Stay tuned. Thank you. For more such updates, please subscribe to our YouTube channel. And don't forget to sign up for the 5-Minute Wrap-Up, our free email newsletter, and get access to this latest guide on picking multi-bagger stocks.